The bulls are raging for gas and electricity this week, whilst oil prices are relatively tame in comparison. Let's take a look at the week's actions in detail. Front month Brent climbed over 50 cents a barrel on Monday as market participants remained concerned over the speed of the recovery in supply. Prices resisted any downward pressure from the news that OPEC had lowered its Q4 demand forecast. Prices continued to rise on Tuesday, albeit at a slower pace. Upward pressure came from a possible interruption in production due to Storm Nicholas. The weekly report from the EIA showed a reduction in US crude stocks of 6.4 million barrels. This, along with their forecast of demand growth for Q4, pressured prices higher. Brent traded relatively flat on Thursday but settled down day on day. Last night, front month Brent closed at $75 per barrel, up just over $2 compared to last Friday. Gas began the week in bullish territory. Reduced Norwegian imports, announcements suggesting Nord Stream 2 would not be fully operational until 2022, strong demand and limited LNG imports all pressured prices higher. Tuesday continued the upward direction, with winter 21 contracts posting the biggest gains, underlining a bleak outlook for winter. On Wednesday, a fire broke out at the IFA electricity interconnector substation. This interconnector provides 2 gigawatts of capacity between France and the UK. Half of this capacity may be offline until 13th of October, and the remainder possibly offline until March 22. Prices jumped as a result, and the news added to the already gloomy outlook for supply this winter. Prices reversed on Thursday. The losses were attributed to profit-taking by market makers after the previous day's rally, although in addition the system was well supplied. Last night, all contracts closed higher than last Friday. October 21 closed at £1.53.55 per therm, up nearly 8 pence. Meanwhile, winter closed up a penny and a quarter at 86.35 pence. A tight generation outlook and surging gas led prices higher on Monday. Winter 21 climbed £9.5 per megawatt hour, that's 7% up day on day. In line with gas, prices were forced higher on Tuesday. Low wind generation, increased reliance on CCGT, and several generation asset outages all contributed to the gains. The fire at the IFA interconnector had a dramatic impact on the market. On Wednesday, winter 21 closed at £1.81 per megawatt hour. That's up £23 day on day. Most of Wednesday's gains were reversed on Thursday, with something of a market correction taking place. Overall, however, prices closed higher than last night compared to last Friday. Winter 21 closed at £1.59.5 per megawatt hour, that's up nearly £19, and summer 22 closed up £1.15 at £89. You can download the full version of this report from our website. Thank you for watching, and we'll see you next week.